Hello and welcome to the Business Standard Morning Show. I'm Veenu Sandhu. Let's take a look at the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, पाजी ये 100% सही किया।
SBI is the banker to every Indian.
Russia dropped another bomb on Monday, not on the Ukrainian turf, but on the world economy. It threatened to shut the main gas pipeline to Germany and warned of crude oil price at $300 a barrel if the West banned its energy exports. Crude has already hit $130, the highest in 14 years. Back home in India, signs of economic distress are showing. The rupee has hit a lifetime low and inflation is soaring. The Indian economy could incur an additional burden of $70 billion in FY23 as compared to the current fiscal. Here's a report on the challenges India is staring at.
The fallout of the Russia-Ukraine conflict might prove to be severe for India. The rupee is close to 77 a dollar. Despite the Reserve Bank's attempts to manage this fall, the rupee has been Asia's worst performing currency in 2022. According to One Financial Daily, several brokerages, banks and treasury departments are fearing the rupee might plunge below 80 a dollar. Meanwhile, the crude oil price has touched $130 a barrel. Now it is feared to go past $150 within a few weeks, or even $200, depending on how the conflict in Europe progresses. According to a report by Kotak Institutional Equities, a likely drop in crude oil exports from Russia could keep oil prices elevated for a protracted period. At an average crude oil price of $120 a barrel, the report estimates an additional burden of $70 billion on the Indian economy in FY23, above the FY22 level. This additional burden would be 1.9% of GDP. To soften the impact on consumers, the government might have to further reduce excise duty on diesel and petrol. Assuming a 10 rupee reduction per litre, there could be a decline of $20 billion in excise revenues. According to the report, an impact of $22 billion might be directly borne by Indian households. Companies will face an impact of about $23 billion, the bulk of which might also be transferred to households. The increase in commodity prices will have a direct impact on the economy as India imports 85% of its oil requirements. Based on the supply shock, real economic growth could be lower than predicted. The targeted fiscal deficit as a percentage of GDP might be difficult to manage, even if nothing changes in terms of government expenditure. Weakness in markets may also have an impact on the government's receipts. For instance, there is the risk of Life Insurance Corporation disinvestment public issue getting postponed. Meanwhile, inflation, which is already out of the RBI's comfort zone, could be driven even higher not just by crude oil prices but also by edible oils. The central bank and the economy could face the double whammy of stalling growth and high inflation. So, what options do policymakers have for mitigating the economic fallout of the Ukraine war?
The degrees of freedom for the policymakers are limited. All they would be able to do is mitigate the risks. They would not be able to eliminate the risk. The foremost that the government can do is to cut the excise duty on retail prices. However, what we should be noting is that impact on CPI inflation, to that matter, is not significant. Policy space in case of state governments is larger. The taxes are ad valorem in nature. They are in a much better position to cut down on VAT rates than the central government. RBI, on its part, they had experimented very successfully with something called an oil window in 2030. In one move, they took away the oil demand from the day-to-day, the foreign exchange market. If you take away oil demand, if the demand for dollars because of oil, you effectively take away nearly 30-35% of your dollar demand from the import side. So it's not that that demand is not being met. That demand is getting met by RBI through maybe one or two important public sector banks. But by and large, for the rest of the economy, since the oil demand is out, USD INR market trades much more, I would say, in a balanced manner. So another thing which both the RBI and the government together can do is try and figure out possible arrangements with Russia and see if the discount that the current regime is offering in terms of some of the commodity shipments, if they can be availed. I guess the impact on the headline impact would be much lower.
As oil marketing companies move to increase retail prices in the next few days after keeping them unchanged since November 4th, we have to see to what extent the government is willing to forego its excise revenue to control inflation. Similarly, with the rupee at an all-time low against the dollar, the RBI has innovative strategies at hand to contain volatility.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
British Petroleum, Shell, General Motors, Ford, Volkswagen, Nike, and Netflix are among the many companies which have decided to suspend operations in Russia over its invasion of Ukraine. The list is getting longer by the day, putting Russia and the Russians in a spot. Watch this report for more.
On February 26th, a US official declared that Russia has become a global economic and financial pariah. Western nations have subjected Russia to a broad range of sanctions that no country of its size has faced in the recent decades. More than 200 global companies and brands have responded to Russia's invasion of Ukraine by suspending their business in or with Russia. The list of companies heading for the exit is growing each passing day as sanctions restrict their ability to make payments or trade with Russia. This will no doubt lead to tens of thousands of job losses in Russia. While a lot of these companies don't want to run afoul of Western sanctions, the corporate exodus is also led by public backlash. Companies are abandoning Russia by incurring high costs as they evaluate the potential damage to their reputations if they continue to do business in the country. UK energy major BP is abandoning its 20% stake in Russia's state-controlled Rosneft at a cost of $25 billion, whereas ExxonMobil is leaving a large oil and gas project in which India's ONGC Videsh is also a joint venture partner. Shell is withdrawing from Russian oil and gas. It is stopping Russian crude oil purchases and shutting its service stations. It has also apologized for buying Russian oil last week. Card networks Visa, MasterCard, and American Express suspended their global services in Russia. This means cards issued in Russia would no longer work outside the country, and cards issued abroad will not work in Russia. The big four accounting and consultancy firms KPMG, PwC, Deloitte, and EY, along with Grant Thornton, have severed their ties with their Russian member firms. While Accenture laid off its entire Russian workforce, McKinsey and BCG are suspending new client work in Russia. TikTok and Netflix have shut their Russian operations, while major Hollywood studios have halted the release of movies there. Leading retailers like Zara, H&M, Levi's, and IKEA have too closed their stores and suspended sales in Russia. Smartphone makers Apple and Samsung, computer hardware companies HP and Dell have suspended all shipments to Russia. Among the large tech companies, Microsoft, SAP, and Adobe stopped sales of their new products and services in Russia, while Oracle suspended its operations there. The two world's biggest plane makers, Boeing and Airbus, have halted the supply of aircraft parts and services to Russian airlines. Boeing also suspended buying titanium from Russia, which is the world's largest supplier of the metal. Two of the world's largest logistics companies, FedEx, and UPS have also halted delivery service to the country, while the world's three biggest container lines, MSC, Maersk, and CMA CGM, suspended cargo shipments to and from Russia. Even as hundreds of brands exit Russia in a hurry, some with significant exposure to the country continue to operate there. These include PepsiCo, KFC, Starbucks, Burger King, Coca-Cola, McDonald's, Philip Morris, and hospitality group Accor. But with escalating pressure, this may not last long.
क्या हाल?
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Meanwhile, markets snapped the losing streak on Tuesday and ended in green. Nifty ended above 16,000 while Sensex gained 581 points, the global crisis notwithstanding. The country is now waiting for the next big event, the outcome of the assembly elections, which will be announced tomorrow. But are the markets excited about it amid the global headwinds, or will it be a non-event? Let's find out in our next segment.
Exit polls for the 5 states announced post-market hours on Monday handed the most populous state in India, Uttar Pradesh, yet again to Bharatiya Janata Party, while Arvind Kejriwal-led Aam Aadmi Party is projected to rule Punjab. The outcome of assembly polls across these key states, UP, Punjab, Goa, Mizoram and Uttarakhand, on March 10 comes at a time global headwinds in the form of geopolitical crisis between Russia and Ukraine, rising oil prices and the possible aggressive rate hike by the US Federal Reserve later in March have already taken center stage. Analysts say the outcome of UP will be keenly watched as it will pave the way how ruling NDA, Bharatiya Janata Party, approaches and prepares for the general elections due in 2024. For G. Chokalingam, founder and chief investment officer at Economics Research, there are other bigger factors for the markets to worry about than the state election outcome right now. He thinks the market reaction will be short-lived. Here's what he said in a chat with Business Standard's Puneet Vadva.
We are not at all worried as an analyst because 2 years away, still the central election for the union government, which is going to be somewhere near May 2024. History says that the voters' ability to remember or the memory of the voter is very short. So whatever outcome, there is a possibility of forgetting. Second, there is a precedence to explain this theory. In the previous BJP regime also, they lost badly in Bihar. Market also fell down, but then again it recouped substantially. And third, the reason to say this is that the objective of voting pattern largely different in the case of central election vis-a-vis state election. According to me, whatever is outcome, the UP election, it will have an impact only for 1 or 2 days. Sensex and Nifty may fall about 1% or so, but again it would recover. But ultimately, the market would look forward to the Fed rate hike and also the inflation scenario.
Political pundits, however, have a different viewpoint and suggest that the outcome of these state polls, especially that of UP, may have a bearing on the general elections due in 2024. According to Pradeep Gupta, CMD of consumer data intelligence company Access My India, Consumer Sentiment Index survey across the country suggests 50% believe that the result of these 5 assembly elections will have a considerable impact on the 2024 national elections. The geopolitical concerns that have cast a shadow on the markets has seen the frontline indices, the S&P BSE Sensex and the Nifty 50 slip 8.2% and 8.3% respectively in the past 1 month. Let's hear what A.K. Prabhakar, head of research at IDBI Capital, has to say about how he thinks the markets will interpret the outcome.
The reform process is what is important. Now, the reform process will depend on how they win. everything is saying they will win. Whether they will win 180 or whether they will be 220 or 250 or 280, it depends on that. Now, if they marginally win, then it is slightly negative for the market because they will not be aggressive in pushing reforms where people will be very unhappy. Even petrol, diesel price hike may take a back seat. They will try to cut more excise duty.
On Wednesday, the markets will continue to monitor the global situation closely along with how crude oil prices play out. Stock-specific action is likely to continue.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है इन्वेस्टिंग मेड इजी एंड रिवॉर्डिंग विद 5 पैसा। इन्वेस्टमेंट्स इन सिक्योरिटीज मार्केट आर सब्जेक्ट टू मार्केट रिस्क। रीड ऑल द रिलेटेड डॉक्यूमेंट्स केयरफुली बिफोर इन्वेस्टिंग।
At the heart of Russia's prickly ties with the West is NATO's eastward expansion. It was also one of the triggers for Russia's invasion of Ukraine. While the Kremlin calls NATO a relic of the Cold War, its members justify its existence. Our next report offers a peek into this transatlantic military alliance's journey so far.
The North Atlantic Treaty Organization, widely known as NATO, is an intergovernmental military alliance that was established in the aftermath of World War II. At present, 28 European and 2 North American countries are members of this alliance, which is headquartered in Belgium. In 1949, there were 12 founding members of the alliance. These were Belgium, Canada, Denmark, Luxembourg, the Netherlands, Norway, France, Iceland, Italy, Portugal, the United Kingdom, and the United States of America. Other member countries which joined in the subsequent years are Greece, Turkey, Germany, Spain, the Czech Republic, Hungary, Poland, Bulgaria, Estonia, Latvia, Lithuania, Romania, Slovakia, Slovenia, Albania, Croatia, Montenegro, and North Macedonia. NATO implements the North Atlantic Treaty, which is a system of collective security. In simple terms, the member states have agreed to mutual defense in response to an attack by any external party. One cannot understand NATO without knowing the essentials about the Warsaw Pact. The Warsaw Pact was also a collective defense treaty. It was established by the Soviet Union and 7 other Soviet satellite states. These were Albania, Bulgaria, Czechoslovakia, East Germany, Hungary, Poland, and Romania. The Warsaw Pact was created in 1955, immediately after the accession of West Germany to the NATO alliance. While the Warsaw Pact embodied what was referred to as the Eastern Bloc, NATO represented the Western Bloc. NATO and the Warsaw Pact saw each other as their primary adversary and were ideologically opposed. They built up their own defenses and were engaged in an arms race throughout the Cold War. After Albania in 1968, East Germany withdrew from the pact following German reunification in 1990. On February 25, 1991, the pact was declared at an end by the 6 remaining member states. As he seeks to limit NATO's presence in Eastern Europe, Russian President Vladimir Putin has demanded that Ukraine never join the alliance. Days before he announced the military action against Ukraine, President Putin linked the current crisis directly to Russia's demands regarding NATO. In 2008, NATO appeared to open the door to membership for Georgia and Ukraine, which are also former Soviet republics. However, neither nation has formally received eventual membership, with a lack of consensus among NATO members.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार, 45 डिग्री सही है।
We Indians disagree on everything, But we agree, SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट.
Finally, I agree.
SBI is the banker to every Indian.
The US has given a go-ahead to NATO countries willing to help Ukraine with fighter jets. But its proposal has not found any takers so far. That's all for today. For more news and analysis, please log into our website www.business-standard.com. We too will be back tomorrow morning with more. Stay tuned and thank you for watching.
If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.